Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Hey, we're going to do more of like an economic update, sort of kind of covering really quick what's going on in the world. It's subject to change by when this video gets posted, but it's pretty close, right? So we're going to cover this here. Let me know what you think. I think every now and then maybe we can do some kind of update like this. We do this for our customers on a weekly basis. On Thursdays, we cover not only the markets, but of course anything interesting, stats, updates, things like that. So let's get started here. Naturally, the virus has taken a toll on the economy, the stock market, kind of, at least as of now. And it is beginning to start to take another toll, like the second wave sort of thing going on here. If you take a look, one of the things that we focus on the Closing Beat, the show that we do for you every day, is continuing claims, a weekly number that comes out. The stock market likes to focus on initial jobless claims, but right now it's changing over to focusing on continuing claims because it's a measure of how things are recovering and how rapidly. So continuing claims mean people still are needing the unemployment assistance, and that number is kind of flatlining. It's down under 20 million a little bit here, but that's still just an amazing amount of people that need unemployment help there, right? So it's just really, really crazy. All right, couple other things as we go through here. Hours worked. We take a look at the hours worked here. I'm going to zoom out, go a little bit further out here. The number of hours worked, whether in manufacturing, business, and even other categories as well, rapidly declining. So we know that those two kind of go hand in hand. They're unemployed, people are working less, but it also includes people that have a job, return to a job, but are not working as much in that job. That's not good. Some good news out there is personal spending. I find this kind of interesting. If you look at personal spending here and retail sales, they've actually increased, meaning people are spending more out there shopping and spending more for themselves as well. You can go into the detail between the two numbers there. We've seen a recent spike in those. And in fact, retail sales have actually spiked to a really sharp high here. What's going on there? Does that mean that everything's good? So on one hand, I just showed you something that was not good, continuing claims, not looking so good there. Hours worked, not looking so good, but retail sales, personal spending is good. And remember, this economy that we're in right now and have been for a while drives itself on the consumer. Right? So it's not as much manufacturing as it used to be. It's, the consumer out there spending money. The problem is, a lot of the money is in grocery store sales. So if I back out personal spending, I'll look at retail sales here. Retail sales, obviously very strong, spiked there recently, sharp increase, sharp recovery. Grocery store sales make up a large chunk of that overall. People buying necessities, right? We're not out there buying the luxury goods. We're out there buying necessities, right? We lean towards those essentials. In other words, if you look at retail sales and you go into it and see the categories, you can see sporting goods, bars and restaurants, gas stations, health and personal care, clothing, furniture, and electronics are all down over the year. Grocery store spending is up. So that's an indication that we're not out there spending on fun, we're spending on necessities. That's a tough one there, right? I mean, and you got to imagine too, the spending that's increasing is likely being assisted by the unemployment insurance, that's the federal extra unemployment insurance. It could be the stimulus check that was paid out there. Remember, these numbers are not up to date in terms of, day by day. Okay, also virus. Naturally, people more concerned about the virus here, and they probably should be. The U.S. Number of cases per day had hit a new high ever, has pulled back a little bit since then, as you can see, but a number of new record highs. Now, I don't mean to make fun of this, but you can blame us down here in Florida for some of that. Huge spike in Florida. So the U.S. saw a little spike above its most record high there. Florida off the charts, man. We went out and started partying again, and that was just the end of it. You've got California, Texas, and Arizona also in the mix, seeing a little pullback, except for Arizona. That's the light green area there. Arizona's still trending higher. Everywhere else getting a little bit of a pullback. Here in Florida anyways, we're basically all required to wear masks. We can't go to bars. So there's a really, really tight kind of restriction without shutting the economy down here to get us to really pay attention to our health and, just kind of focus on this here. Now, we can also measure the level of concern by the consumer. Cases per day, that's headlines, make some news there, but we can measure the level of concern by the consumer by looking at Google search terms. Sometimes it's the easiest thing to do. If you look at Google search trends over the last 12 months, we searched for COVID test, urgent care, and COVID symptoms. And let me explain. COVID test, COVID symptoms is a natural increase, right? People just wanting to know more, knowing if they have it, knowing if they should be concerned about going to the doctor. We put urgent care in there because Urgent care right now is being used as a preview window into potential hospitalizations. Hospitalizations are increasing still. They have not flatlined in any kind of a way, really anywhere, broadly, U.S. And so urgent care is seen as a preview of people that maybe are seeking out care, don't want to go to the hospital. Urgent care sends them to the hospital to get tested and eventually find out they have a hospitalization because of the virus. They already have that. So that's what's being used by the statisticians, I like to say, out there. If we zoom into the states we already talked about, of course, you're going to see a spike, right? Arizona and our home state here in Florida, not looking too good. New highs in terms of urgent care, COVID symptoms, COVID test. Go on over to Texas. You've got a quick spike in those. Georgia, not as bad, but increasing and becoming a hot spot there themselves. And so we can tell that people are becoming more concerned about the economy. What do people, and their virus, of course. What do people do when they become more concerned? They stop spending, right? They can be concerned about anything, but they stop spending and they focus on their concern. If housing becomes an issue, they stop spending, they focus on housing. If the virus becomes an issue, you know, you've been through this, right? You stop focusing on spending and fun and extra days out, and you focus on the virus, protecting yourself, doing whatever you do, other people to more extremes than others. All right. Also, hospitalizations, as I mentioned, they are rising there, and you can't say that the cases per day are based on the tests being given. They were spiking there for a while, but the tests being given had declined for a little bit. We've got a new recent spike here, but all in all, we had a decline in the number of tests being given, but a spike in the number of new cases per day. So we can't use that argument anymore. We were using it for a while. Everybody was using it for a while there. And as I mentioned, hospitalizations, not even trying to flatline. We've only had one tiny little dip over the U.S. here. This goes back into the beginning of June, and that's it. Other than that, you've seen a few level offs, but basically hospitalizations are increasing there. One other thing I want to point out to you is although this data is a little bit delayed here, but there is a slight inverse correlation to the the number of cases per day and the stock market. Cases per day go up, stock market goes down. Although this data initially here was delayed, right? And if the audio is delayed and you're watching this, I'm not taping this again. I've tried to do this a few times now. I'm sorry, just to deal with it. Anyways, this data is a little bit delayed. There is a correlation, however, though, and especially now. I'll give the market some credit. We saw a spike to new highs in the number of cases. Stock market barely budges to the downside in the grand scheme of things. I know we had some bad days in there, but there is currently an inverse correlation in that. Now, what does it mean for you? What does it mean for you out there trying to invest, prepare yourself for retirement, whatever you're doing? It means one thing to me. It means that volatility should be the focus. Growth is going to be what it's going to be. Position yourself for growth or conserve, whatever you're trying to shoot for, of course, shoot for your goal. Volatility becomes the focus. And I've been focusing on this a lot with talking about the REIT ETFs and a lot of these different classes, picking dividend funds and things. You can go look through our FinTips videos to check it out. But super, super, super important that you focus on volatility going forward. Doesn't mean you go to cash, doesn't mean you freak out and, and the world's going to end or whatever. But the volatility that you're experiencing for the returns that you're getting, you want to make sure it's the lowest possible, right? Takes a little legwork on your part. If you have a financial advisor or someone managing your investments, go seek them out. If you have a 401k at work, you can schedule an appointment with a guy. He'll talk with you. He'll help you out. It's free. They don't charge you. So make sure that you're asking for the lowest volatility for the exact same returns. Make them do some work. I'm happy to do it for you here if you're one of our customers. If not, no big deal. I hope you'll check us out at jazzwealth.com in the meantime. And I appreciate you guys watching, putting up with us through all these videos. Enjoy the rest of your day. And we'll see you later, 5 o'clock, the closing beat. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.